Hello everybody, welcome to this video, why so many fail in the Forex market. It is said that 95% of all Forex traders fail in the Forex market. Now, many reasons are provided for why 95% of all Forex traders fail. But I'm going to provide you a core reason that makes all these 95% of traders fail. A core reason that has to do with what every trader passes through to become a trader, and it has to do with the training that every trader must pass through to become a successful Forex trader. Now, to do this, we're going to move over to babypips.com. Babypips.com is a site that has a Forex course beautifully designed and made in an appealing manner. It is comprehensive, it is nice, and it has been recommended for years to people who want to learn how to trade the Forex market. Now, they designed their course to mimic the real life school process of us as human beings. So, this is it. You start at preschool. At preschool, which is the first module in their course, you have in the content you have what is Forex, why trade Forex, who trades Forex, where can you trade Forex, how do you trade Forex. And then we move over to kindergarten, where we have Brokers 101, 3 types of analysis, types of charts. And then we move over to elementary, where we have the beginner's guide to technical analysis. We have under this we have support and resistance levels, Japanese candlesticks, Fibonacci, moving averages, and popular chart indicators. And I think I should mention here that some of these things that are being listed here, that we are mentioning here, are very deep. This is very deep, the Japanese candlesticks. This is very deep too. Some people spend years trying to become masters at using the Japanese candlesticks. Others build their whole strategy around support and resistance combined with Fibonacci. So bear that in mind, that some of these things that we're going to gloss over are very deep, have very deep content associated with them. So the next is middle school, and here we have oscillators and momentum indicators, important chart patterns, that's a deep one, pivot points. In module 5 we have, it's called summer school, and we have the Elliott wave theory, harmonic price patterns. Module 6, labeled high school, in which you're supposed to dig deeper into more technical analysis. You have trade divergences, market environment, trading breakouts and fakeouts, fundamental analysis, currency crosses, and multiple time frames. If you're getting tired of me reading this, that's actually the point, that's actually the objective. Module 7, you have undergraduate freshman, that's the label given to module 7, and you have in the course outline market sentiment, trading the news, and carry trade. And we can go over to module 8, labeled or named undergraduate sophomore, and here we have in the course outline the US dollar index, intermarket correlations, using equities to trade Forex, and country profiles. And we can go on. This is module 9. You can see what you have here, developing your own trading plan, and on and on and on. You have module 10, and on and on and on. Module 11 is something of a summary, but not quite, but something of a summary. So you see how long-winded it is. Now this is my point. When you want to learn Forex, you find out that you have to learn some things. And then you find out that you have to learn some more things. And then you find out that you have to learn some more things. And then some more, and then some more. Now your learning becomes long-winding and spans into some months. Okay, after that you start trading. Let's assume that you were trading with a demo account and maybe you were successful on a demo account. Guess what happens? Once you start trading live, guess what? You start losing your money. Now that happens all the time. Now the reason is that at the beginning of your trading a live account, you usually lose money. And the reason is, no matter how successful you are with a demo account, there's something that happens to you when you start trading a live account, and that has to do with the psychology of the game, the psychology of the trade, or of trading psychology. The fact that that is now real money you have, they are not just empty numbers, changes the dynamic completely. And then your decisions, you see, most of the time your plans, your trading strategy deserts you, it flees from you, or more correctly, you flee from it, because you're an emotional what's the right word? You're like an emotional wrecking ball. You flee from your set rules. You beat yourself for closing a trade that would have ended up in profits if you had just let it go. You also beat yourself when you double up because you lost the trade you would have made a profit, and so you unreasonably increase your lot size, and then now you've started bleeding very fast. It's a frustrating thing. Now let me show you how the charts look, and I think you might be familiar with that. Most of you will be familiar with that. Let's look at this chart now. This is price moving over time. Even when price is moving down, it's moving down in a zigzag manner. When it's moving up in a zigzag manner. And that's your money, your hard-earned money before your very eyes, moving up in a zigzag manner. So now this is why people fail. Now this is it. From the time you start trading live, after learning for some months, from the time you start trading live to the time you find your rhythm profit-wise, nobody knows how long that's going to take. Nobody knows how long that is going to take. So let me put it more correctly. From the time you start trading live to the time you start actually being profitable, nobody knows how long you're going to be losing your hard-earned money. You see why it's precarious and many give up. It's not easy to consistently take actions that will lead to your losing your hard-earned money. It's not easy to do that. Now, if we rewind back to when you said, yes, I sign up for Forex, let's ask ourselves some fundamental questions, and let's be true to ourselves. Did we sign up for all that learning? Did we sign up for learning so much, after which we would lose? Normally, when you learn something for a long time, you are good at it. But now, you learn to lose for a length of time that nobody can define. The only thing a trainer can tell you is that the more mastery you have over your own emotions, the faster you'll get success. But how can a trainer measure your mastery over your own emotions? It's not something we can measure, so nobody can tell you how long it's going to take. So you see, you learn more than you anticipated you were going to learn when you were starting, only to lose when you begin, and nobody can tell you how long your losing will be. That is a fact of the learning process in the Forex market. except you are lucky to find a successful trader, and that's hard to find, who is also willing to take you under his wing. That is very hard to find. You see, that is why I do not recommend the learning route for anyone. Now, I recommend the learning route if I have told you all this and you say, yes, I still want to go ahead. Then, of course, you know how high this mountain is and you want to conquer it. By all means, you may go ahead. So, what I instead recommend is social trading, what we'll be talking about in the next video. A situation where through technology, which is like one click or a few clicks, a situation where you connect yourself with successful traders, and whatever they do on their account, your account automatically mimics. It's done through technology. And so if they're successful, you succeed. If they're failing, then you fail. So it actually takes away this whole learning process and the pitfalls associated with it and puts you straight into profit. The only thing is you have to do it right. You have to follow the right traders. You have to do it right, and that's what the remaining part of this course is about. How do you trade without knowing how to trade, using social trading and being successful at social trading? With social trading, the success rate is much better, but now we're going to show you how to be exactly successful from the get-go with social trading, so that you don't have to analyze any markets, you don't have to even know how to trade, you just have to know how to use social trading, which is quite easy, and touch your first Forex profits. Touch your first streak of consistent monthly profits in the Forex market. That is what this is all about. So in the next video, we're going to go into introducing you to the social trading concept and how it works. And hopefully, when you take the steps that will be outlined, you can move over to the small 5%, I mean, the 5% of profitable traders in the Forex market. So please be ready. In the next video, you will have to follow instructions as we go along. You will be setting up a few things on your own end as we introduce you to the, permit me to say, magic of social trading. And let me also say again that it's because I'm going to show you how to do it right. That is why you're going to be profitable. Some people don't do it right and they're not profitable. Doing it right just depends on one or two tiny things that some overlook and they get hurt. With the guide here, you're going to do it right and you're going to make profits instead. So thank you for watching this video, being here with me on the video, and I look forward to seeing you in the next video. Stay cool.